Finally, one more thought on Robinhood. The trading app that the company launched back in 2015, it's credited for disrupting the investment world by letting people trade stocks with no transaction fees, letting people buy fractional shares of companies, and letting people do all of this with borrowed money on a scale that had rarely before been offered to small individual investors. That business model, it's been a hit. 18 million active users on the Robinhood app, $1 billion in annual company revenue, and $80 billion in total assets under custody. But here's the thing. Robinhood's ascent and the playbook that it followed, it isn't new. While Robinhood certainly deserves credit for the way that it helped democratize finance, the revolution, it's long been underway here. Since at least the 1970s, you have to go back to May Day, 1975. That's when the U.S. brokerage industry and that fixed commission structure was deregulated under SEC mandate. You have to go back to a scrappy 30-something entrepreneur named Chuck Schwab, who undercut fees by 75% and let his customers place orders directly instead of having to rely on some stuffy broker in New York to make the decision for them. You have to go back to Leslie Quick. You have to go back to Bill Porter. You even have to go back to a passive investing evangelist like John Bogle. That's the lineage that gave us Robinhood.
I was never in this business to build a colossus, but as I've told people many times, I was too stupid to realize that if we gave investors the best deal they would ever get, I'd be building a colossus.
And of course, that lineage, for all its popularity, has also been the subject of constant criticism from institutions and the government alike. Robinhood CEO Vlad Tenev, he's been grilled by Congress already on whether the game-like features of this trading app fueled some of the wild speculation this year in GameStop, AMC, and other stocks. Regulators are still looking into whether Robinhood is truly disclosing the risk of margin trading to its retail base. And then, of course, there's all that controversy over Robinhood's main revenue stream, that payment for order flow model that relies on large institutional trading firms. But despite all that, the mass appeal here for small retail investors, it's there, it's real. Since Schwab pioneered the discount brokerage model decades ago, the triple-digit commissions on simple stock trades fell into the double digits. And then it dropped into the single digits. And now with Robinhood, it's at zero.
We think we will do very well offering our services free for transactions.
So Robinhood, along with its startup competitors like eToro, Webull, Acorns, it's less revolution and more evolution. Evolution spurred on 50 years ago by government regulators seeking change, entrepreneurs who were smart enough to see change a-coming, and a growing number of individual investors looking for a simpler and lower cost way of participating in the greatest financial market in the world.